Let's be honest, markets did not make you lose money. You did. Until you stop blaming it, you will keep repeating the same cycle. The cycle of losses, rage, reset, repeat. But in the next few minutes, I'm going to flip that mindset and I'll show you a system, a step-by-step process which you can use, that I use to get funded, my system that I use to teach my student in the academy. I'm going to share with you step by step on how you can become profitable using this simple strategy. This was a trade I took during the Asian session earlier on. Almost so just within a day, we've made about the same profit, guys. Let me show you without further ado. Let me dive right in. So the first thing that we need to pay attention to is our bias. Now, I need you to understand this. The market does two major things. So the first thing that market does is that market gives fair value. And secondly, it seek liquidity. Market gives fair value or seek liquidity. Any of these two things are very important. These two things are very important because they will tell you exactly where the market want to go to. Okay, so let me show you exactly how you can apply this practically. So I will just give us an hint on how to do this, and you go to your chart or use my previous videos which I've made on the channel. You combine the knowledge, and what you do, you use this to improve your setups. Meanwhile, this alone, you can use this alone to pass your pro-firms, use this alone to create a trading plan for yourself. All right, so first thing first, we have to go to the daily time frame. Why do we need to go to the daily time frame? The daily time frame tells us the overall movement of the market, and of course we are not going to take our trades based on the daily time frame. First thing first is know where price is coming from. Now remember, we said price does two things: seek liquidity or give fair value. What do I mean? This is exactly what I mean. If price is going to the upside like this, it means only buyers are involved in the market, right? So if only buyers are involved in the market, then there is no market. You agree with me that for every market there must be an equal buyers versus sellers, right? So if we have buyers, then we need to have an equal amount of sellers in order for the market to in order for it to be called a market. So in trading, for us to call this forex market, we need to get sellers involved as well as buyers. But the question now is, how do we know when buyers and sellers are involved in the market? Now, though we don't have access to raw data, however, there is a simple way that I have figured out that you can use to identify this. First is to know the concept, to have an understanding, to have a knowledge of how this works. Then secondly, you start to implement this step by step. Okay, so for those of you who trade ICT concepts, this will be a little bit easier for you. For those of you who trade smart money concept, this will be a little bit easier for you. And if you trade MSN Arrow just as I do, then this will also be easier for you. So you see that this video is actually made for you. So let's pay attention to these details. Now, you need to have an accurate understanding of each of these details, because when you do, it will give you a upper edge, right? An upper hand. So the first thing that you need to understand, who are involved in this market. As you can see, we have buyers, right? So if there are only buyers, then it means the market will keep moving, right? But the market does not move that way, but rather for every push up, there has to be an equivalent of sellers. So sellers will need to be involved in the market. Sellers will have to be engaged, right? So how do we know that? When we see a pullback in an uptrend, then we know that, okay, sellers are given a fair chance to get involved. And this is why I say that market does two major things: to seek liquidity and to give fair value. Now, I will explain again before we go to the chart. If this is going to the upside, for example, right, price is pushing to the upside just the way we're seeing here, right? Now, what is doing is this: there is no fair value, no fair value at all. Why? Because it is only buyers, so it is not fair. Okay, it is only buyers that are involved in the market. Now, how do we now know when sellers are coming in? Remember, of course, I'm going to show you when we go to the chart, but just grabs this concept first. For you to know when sellers are coming into the market, the first thing is ask yourself the question, what is price doing? Is price seeking liquidity or providing fair value? Okay, so for example, price pushing up like this is providing fair value. And what happens when this is happening? There will usually be a gap here. All right, and this is what the ICT students call the fair value gap, and of course we can simply call that a fair value gap. Now, many of you trade fair value gap and you don't know why it is called a fair value gap. Now take note of this. Take note of this. You know, for every buy there is also an equivalent sell positions, but unfortunately our brokers don't make it known to us, so we don't see it physically, right? But they are taking the buffer behind the scene in the back end, and this is why, and that's why we are giving leverage to trade with. So leverage is what gives us an upper end, that's what brokers use. That's what brokers use to that's what brokers use to give us an equivalent of our orders that were being placed. So for example, placing a buy order here in your broker is also placing a sell order, and this is why we have both buy limits and sell limits, buy stop and sell stops. Okay, so that's not the video for this, is not a video for that, so I don't want to keep this boring. But the reason why I'm explaining this is because once you understand this concept, is going to improve the way you view the chart, and you are going to stop making unnecessary mistakes. Okay, so this is the first thing that we want to take note of. Now, when price goes up like this, right, when price is pushing like this, it creates a leg, and that's what we call what? A swing leg. And what is a swing leg? Understanding this definition and context is very, very important. The swing leg is when we have a lower candle, a upper candle, and a lower candle. So this becomes a swing point, rather a swing point. But we can now have a swing leg when we have a swing point, right, coupled with fair value gap. So that's when we have a swing leg, and this is very, very important. So when we have this, for example, price takes this high and create what? A leg. And what happens? Fair value gap is created here. Now let me explain why this is a fair value gap and why you need to pay attention to this. Now remember, I said earlier that as this market is moving to the upside, which people are involved? Literally buyers, right? It means that there is no fair chance of sellers getting involved in this leg. So everything here are just buyers that are involved. Okay, so these are the aggressors, these are the people that are, these are the aggressors, right, that are involved in the market. So definitely we need to pay attention to what is happening with price. So first, when price take this high and they leave this leg below, it means that only buyers are involved in the market, right? But the market is not complete if sellers don't get involved. So how would sellers get involved? This is where we begin to see some level of retracement. So price will retrace into that fair value gap to cover that gap and continue to the upside. Now, it is called a fair value gap simply because why price was going to the upside, what happened? There were no fair chance of sellers to get involved, so we had only buyers on this price leg, right? So therefore we now have what is called a fair value gap. right? So a fair value gap was left behind. Why is it a gap? Because sellers were not involved in this move. And when that happened and sellers comes in and get involved, mitigate, so the point through which both sellers and buyers meet, that level, right, this is what we call the fair value. So there's no longer a gap. Why? Because the sellers have covered up for the buyers. Okay, so let me give you an instance of what I'm trying to say, probably an analogy, before we go to the chart, and of course you are going to understand better. So assuming these are sellers, or rather these are buyers, we have how many buyers? 1, 2, 3, and okay, let's complete 4. And we also have sellers 1, 2, 3. Okay, now these are sellers, these are sellers, these are sellers, these are sellers. All right, now will you agree with me that there is no fair value in the market? Actually, there is no fair value at all. Why? The reason why there is no fair value is simple, because the sellers and the buyers, they don't have an equal chance in engaging with the market. So what happens is this one will cancel this, so this one will cancel this one will cancel this, and we'll have what? Buy. Which means in a traditional market, in the real market, what happens in this scenario? Price will go up. Why? Buyers are involved. So because there is no fair value that was delivered, when this leg is moving, you will notice it will leave what? A fair value gap. And this is very, very important. Okay, so let me not bore you with all of those information right now. In case you really want to learn more in-depthly, this is a new system which I call the Kumepip 3P system, which I'm actually sharing with my students currently in the Kumepips Academy. I think this is the best time to get in case you have had it in mind to do so before now. All right, so let's move on quickly. Now, the first thing, or the most important thing you want to understand, is the target. Where is price going to? What is happening? Where is the target? Where is the fair value? Where is the liquidity? Do you understand? So now that you have that basic knowledge, so let's come to the chart and let me show you exactly how we're able to catch these setups today. I just hope that this time will permit us. If otherwise, then I will have to make another video for you guys so that it doesn't have to be too long. Okay, so we have this level here. Now there's what I call the Kumepip decisional points, or rather the decisional levels. Now this is a basic level whereby an A-shaped support and resistance is broken. So this is what we call the A-shape. Remember our basic class, right? In case you don't know what I'm talking about, I have a video on my channel where I talked about MSN arrow, where I talked about this in depthly. Go and watch that out. Okay, so we have a basic A shape that was broken. So this is actually a decisional level. So I will call this the Kumepip decisional level. All right, so why is this very important? This tells us what is happening in price. Who is in charge? Who exactly is in charge? As it is now, the buyers are in charge. Now this is not all, because this is a daily time frame and we are not going to trade on the daily time frame, so we need to go to a time frame lower. Now this is a time frame lower, and of course this was last week's price action, so we have to play price, and I want to show you live most recent price action so that you will have an understanding. And of course, in case you are in doubt, all of these trades were sent live on my channel. You want to check that out, right? There's no BS here, there's no bullshit here. Everything we do here is legit. Go check it out and you testify. Okay, so let's dive right in. It's getting more interesting. Meanwhile, in case you have not liked the video, do well to do so, because it encourages me to make more videos like this. All right, so this is very important. This is the 4 4-hour chart. Now on the 4-hour chart, remember what we had on that daily? That's exactly what got created right here. It's the same thing that just happened here now. Okay, so ask yourself the question, where is price coming from? Take note of this. Remember, we have a fair value gap here. Now you know why there's a fair value gap here, because the sellers have not gotten an equal opportunity to get involved in the market. So what is this? This is a buy stop. This is a liquidity level that we're also expecting price to go take out. Why? Because price is also coming from where? From a fair value gap. You see that? So it's very important. Now, beside that, we also have an SNR level here, which is support and resistance, V-shaped support and resistance here. And what do we have here? We have the Comepip decisional level type 2 right here. Of course, you don't have to understand that now, but don't worry, I'm going to show you in a bit. Okay, so let's forget Friday's price action and come into today's price action. So literally what I was looking for, I was actually awake because this was in the 9th, and this was market just opened here, and I was willing to take the trade around 1 a.m. GMT plus 1 time, which is UK time. All right, so we have this on here, and this is, yeah. All right, so what do we have? Liquidity was taken. Now, two things here. Remember, we seek liquidity and we provide fair value. So what is happening here? Is this one providing fair value or seeking liquidity? There is only one way to find out, which I may not show us fully in this video, but I'm going to mention it. Now, this is where you need to understand the candle ranges. Understanding the candle formations are very, very important. So for example, this is an indication that it is a liquidity run, not a liquidity sweep. There's difference between liquidity run and liquidity sweep. Okay, so let's dive right in. Now, having seen this, I was very much interested in this area, and I mark this zone. Why? Because this is also a decisional level. Okay, so let's play price, and of course, and I'm going to show you one or two things as we move on, because I'm interested to take my next setup from the next 1 hour candle. All right, so at this point I was actually interested in taking my setups. I was interested in taking this trade, and of course I actually did. Now remember that we marked a level here on the 1 hour time frame, and that this was the particular level which we marked on the 1 hour time frame. And what do we have here? We have a basic decisional level. All right, and I don't want to say much about this particular one, but let me talk about this one that is going to the downside. Remember, this was a V shape that is being formed, disrespected rather, right? So as at this point we are interested in taking our trades here, but there has to be a liquidity takeout. But hold on, this is not going to be the regular liquidity that you know, but this liquidity is also going to be based on the decisional levels. Okay, so what do we have? We have a decisional level here which has been taken. All right, and of course I will call this the DL liquidity, which is my decisional level liquidity. So of course now I am interested in taking this buy setup, and as immediately I saw this liquidity, for example, I expected and anticipated that price takes out that liquidity and tag into this SNR level or into this level and push to the upside. And this was why I had to place my stop loss a little bit below this, because I was actually expecting price to push from here, and at the worst case scenario price would push from here. And let's find out what happened. Now playing price, and exactly this was what happened. Now it didn't just stop here. You can have a re-entry here and you place your stop loss on that same level. So we're not going to do that in this video, because this video is not just for entries, but it's also to show you a concept that could literally change your trading game forever. All right, so let's play price, because I am eager to show you the next example and the next scenario. So you see, of course, I took this trade and placed my orders, and I placed my stop loss, take my take profit, and what? I went to sleep, because this was actually the Asian session. This was literally the Asian session, and of course we have it on here. It was Asian session. If I put in my sessions here, you see that this was actually the Asian session. All right, and of course, who said you can't trade the Asian session? You can. All you need is to have the right knowledge. So I don't know, can we have a second example of how this thing work? And of course, this particular one was a simple continuation setup. And how did I catch this? It's simple. As a matter of fact, interestingly, this was called live with the Come Pips Academy students today, in our live session today, and I showed them exactly why I was taking that and why price might not want to push up from this, because why this was a 1 hour decisional level. So of course, once we know this, it's going to change the way we view the market for life. Okay, so this was a level. I didn't enter directly. I went to the 5-minute time frame, and what was my expectation? As you can see, this was a 5-minute time frame, and we had a rejection from this key zone, and of course you can see this was the SNR key level on there. And of course, I did not take this because we'll have to wait for a confirmation and see exactly what is happening. Okay, so basically what do we have here? A DL level breaking. Look at this. Of course, you might not understand this fully now, but I believe you are getting what I'm sharing with you. Please ask your questions in the comment section below. And of course, we had a break on there, we had a level on here, and this was where I was willing to take my buy entries. And what did I do? I took it immediately, and boom, gave 1 to 3 risk to reward ratio. Now you could say, okay, we stopped there. No, I didn't stop there. I did not just stop there. And of course, this one was a simple continuation set of very simple and basic. Why? Because price was already have given us our level. We already know what price is doing, right? Price is literally doing what? Seeking liquidity. All right, seeking liquidity, because it's not even giving opportunity to provide fair value, right? At least on the higher time frame, but on the lower time frame, you can see that fair value. Look at that. This, where do you think I took this trade from? Same thing that I just, same analogy that I just gave earlier. And of course, this was the last trade that I took today. And of course, look at that. Boom. It's simple. This one was even very simple, and immediately take profit, and boom. Look at that. So those who are greedy, who don't know what they are doing, they will be cooked right here. They will just be, you know, they'll be wondering what happened. Why did price just dip like this? You see, you have to understand. So for example, let me give you a basic example of what I just explained now. Now we had what? A fair value gap here. Now there's what we call a fair value area, and this whole area is a fair value area, but I won't be talking much about that in this particular video. Now we have a fair value gap here, and what happens? Price came in, and what are we expecting? Price have provided fair value, right? Price have provided fair value by tapping this zone, tapping this DL level, or you know, of course it didn't come to this. Look at it. This is a basic and traditional SNR level, and of course price tapped that. So where are we expecting price to go next? External range liquidity, which happens to be here, right? So of course this is a safe zone. This is a safe zone. This is a safe zone. So you know that when this happen, what will happen? price will come back to do what? To do what? I'm waiting for you. To provide fair value. All right, because see, price provided fair value, sought liquidity. What is it coming to do again? The same thing. Okay, so this is another example. I don't know if we have time to do this, but let me just do this quickly. This was GBP JPY, and it's same process, same principle, same system, and this is what I call the Comepip 3P system, and this is literally going to change your trading game forever. Just have an understanding and you are good to go. So the first thing that we want to do is we need to go to the higher time frame, right? But for the sake of time, we'll just stick to the 4-hour time frame. Now, I already explained this. Of course, I'm expecting that price continue to the upside. Why? Because this is no liquidity sweep, but rather it is a liquidity run. So what am I expecting? I'm expecting price to go to the upside, right? Of course. However, I want you to hold on, because this zone was actually a daily zone. For example, without saying much, let me show you proof. This was actually a daily zone, and of course, after a daily zone, I'll go to the 4-hour, and what happened? 4-hour is giving me an indication that price might likely continue to the upside. But you know, I'm a day trader. I wouldn't want to wait patiently. Of course, I'm patient, and because you see, this is dealing with higher time frames, right? So 1 hour, 4 hours, these are our time frames, right? Now what I'm saying is this: because I'm a day trader does not mean that, oh, I'll just wait for weeks before I could get a setup. No, not at all. I wouldn't want that to happen. So because of that, I know exactly what I'm looking for. What is price doing? Either seek liquidity, provide fair value. And what do we have here? We had a fair value gap on here. Why is that? It is simply because this was actually a level that price left behind. Why? Because only buyers, participants were in this particular market. Only buyers. So sellers did not have a fair chance to get involved. So because sellers do not have a fair chance to get involved, what do? I will simply wait for price to seek liquidity and then expect price to provide fair value. And that's exactly what we did here. And of course, price took out external range liquidity on the 4-hour, and as you can see on the 4-hour right there, and gave us an indication that it wants to go to the downside. So I was interested in taking the sales from this particular level. So what was my expectation? It's quite simple. Remember, we are providing fair value. So where is our target? Our target, obviously, we have to be around this low. Yes, around this low. If we go to the 4 hours, you will notice where I actually marked this zone, because this zone was also another fair value gap. Now this whole level is a fair value area. All right, this is a fair value area. All right, but let's not say much about that today. In another video, I might make a full-fledged video on that particular scenario. Now pay keen attention right now, because it's getting more interesting. Remember, we are on the 1 hour time frame, so we are interested in taking the sales. But how do we engage? This is where the Comepip decisional levels are very, very important. So we had a break on here. This was a break, and this was a classic SNR level on there, right? And this was also additional level. Now if I go to the 15-minute time frame, this is the 15-minute time frame, and of course on the 15-minute time frame, I'm expecting a liquidity to be taken. And where exactly is my liquidity? Where was the liquidity provided? Now the first liquidity that was provided was actually this particular DL level. So of course I will call this my DL liquidity. So this is my liquidity. Once price takes this, of course I'm interested in taking sales from here. Unfortunately, I was not on chart. I did not take this particular sales, but this is the logic behind every trade that I send on the free Telegram channel and that I send in the academy. Now, because this will give you a systematic way, is not going to be subjective, because one of the reasons you are not that profitable in your trading is because you are too subjective. You need to be very objective in your trading and be very logical in your trading, because this is a game of probability, a business of probability. Now, of course, I knew that at least price will come to this fair value area. Look at that. Remember that fair value area I drew earlier on? That's a fair value area. So look at, so I knew that price might likely get there. Even if it doesn't, it will get there at least 80% chance, right? With 80% chance. So what did I do? I had to place my take profit a little bit above it, and that was exactly what price did. So where did I get involved, or rather where did we get involved? Because of course, like I said, I've said this times without number just in this video, because I want you to join my free Telegram channel so that you can be taking my free setups daily. Take them, get funded and pay for mentorship. Okay, now, by the way, in case you really want to learn and join my mentorship, if you type this on my DM right now, I'm going to give you a 20% off discount. If you type for example, I want you to type 3P system and send to me, I'm going to give you a 20% off discount to join the academy. And if you are from Nigeria, I will give you up to 40% off discount. All right, so feel free and type that. Right, let me delete that before you copy it. I'm just kidding. Right, go ahead. Right, and just put that on. And because I really want you, this is the last quarter of the year, don't gamble with your time. Learn and get the right knowledge. Okay, so this is quite interesting. So how did I get involved? Because I knew that, okay, price is actually about to provide fair value. So since fair value have not been provided and price was already here, I was interested in entering. And how did I enter? There was a DL level here, a type 2 DL level, and what happened? I entered off of that traditional SNR level, all right, which is of course MSNR level. And of course, that was, I gave it a little bit of buffer. Why? Because, you know, remember this was supposed to be the initial entry, right? So in case price wants to do its thing, it should have space to breathe. Otherwise, my stop loss would have been if this was the entry, my stop loss would have been somewhere here, right? But of course, we need to give it some time to breathe, and that's exactly what happened here. Now, there's no time. I would have shown you. Of course, it did not give me opportunity to buy, to take this buy, because I actually saw this buy coming in. How did I know? I know because remember, I mentioned this as a fair value area. Remember this as a fair value area? Yes. So you don't want to miss this knowledge. This could change whatever. It could change your trading forever. I think this is exactly what you need to improve your trading system. I hope I was able to teach you one or two things. Please, in case you are confused, I know it can be quite new to you, please feel free, let me know in the comment section below. And of course, the only encouragement that you could give to me right now is to like the video, share with a trader, and of course, don't hesitate to comment below. It helps the YouTube algorithm. So thank you so much, and I want to see you on the profitable side of the market.